What's good, YouTube? So today I am bringing you a long-awaited video. Yep, Wi-Fi might be in and out while I'm recording this, but that's okay. It should be okay, at least for the recording. Um, but yeah. So anyway, this video. Um, is this my first video of 2025? I don't know. I don't know. I'll have to check after I'm done recording. But either way it goes, I don't want this video to just apply to your 2025, but just this is how I'm going to be trading this year and proceeding. As far as I'm concerned, I have I mean, you might have heard, if you're new to trading, you haven't heard this. You haven't probably heard anything, too much of anything at least. Uh, but if you've been trading for a while, or even just been studying, researching trading for a while, then you know that you need to have a trading plan and just like a strategy, plain and simple. Um, and with that being said, I have my own personal strategy slash trading plan, and I've been kind of tweaking it to what it is now for 3+ years, 3.5 years or so. I've been trading since the big 420 meme GameStop boom thing, because around the time I was researching how to make passive income, studying dividends, um, ETFs, investments, your basic stuff like that, stocks. Um, and then when I stumbled upon crypto, I thought I was investing in crypto. I had joined the group, and before I knew it, I was trading crypto. And before I knew that, I was trying to learn what trading was specifically. And then just a lot has brought me to where I am today. On my Instagram, I'm sharing my weekly trade analysis, or not really analysis and stuff like that, but and I'll probably continue this all of 2025. I'll say that. I'm not sure about next year. It's too early to tell, but uh, yeah, definitely. All of 2025, I'll be uh, posting on my Instagram. I will be going live in my Discord, and I'll go ahead and make the commitment to you all and say it'll be free all year. Um, that I'm doing it. Right now, uh, I'm just trying to help other people because it's just what I want to do. Call it my passion. Just I just know it is people who pay for just the knowledge that I happen to know, and so if I could just put it out there for free, and even some people catch it and be able to benefit from it, then that's what I want to do. Uh, And with that being said, yeah, I want to just get into it. What is trading? Trading it's like investing, except you're making like short-term speculations, price speculations, based on either technical or fundamental analysis. What is fundamental and technical analysis? Well, fundamental analysis typically involves like data directly tied to the economy or the market or business of like whatever asset you're trading. So if you're trading a stock, fundamental data would be like news that comes out that directly affects that stock, or that is even like that company's things they're doing and stuff like that. All of that is fundamental data. If you're trading currencies, fundamental data would be like elections, policies being created and stuff like that. regulations amongst like imports and exports and stuff like that. So that'd be like all the stuff that falls into fundamental data is like typically news. Um, Whereas you have technical analysis, which is your like chart, your price chart. You might have seen them. They're the red and green candles, the bars going up and down. Um, they represent price and time, uh, or price within a period of time, and that's where you spot like support and resistance and supply and demand and the trend and stuff like that. Uh, yeah, that's all technical analysis, stuff like that. When you see people drawing on those charts, drawing lines, or just looking at those charts, that's technical analysis. And for me, I am more of a technical analysis trader. News can help, but it could also just get in the way, I think, sometimes of my technical analysis because of me and how I am. This you may be different, but for me, it's just like if I see like the technicals don't align with the news, sometimes like I'll still like that creates the confusion for me, and then market still might respect the technicals, or you know, even if the technicals fail in that moment for say the particular trend that I was looking for, I wouldn't take a position anyway without getting certain confirmation. So by that point, uh the technicals would align typically if things do like reverse on you, so yeah. So with that being said, what I'm going to be going over involves all technical analysis. And yeah, so next thing with my trading, um now that we kind of have a general understanding of what trading is, that I want to get into though is just my approach in that like the step by step way. Kind of imagine you're like just starting here at this job and you're a trader, and I'm going to you're going to shadow me, and I'm going to show you exactly how you need to be doing your job, what you need to do, or you're going to get fired. And you you don't want to get fired, right? I hope you don't want to get fired. Um, the thing is with trading, getting fired, quote unquote, because obviously I'm not there with you. I'm not going to kick you off of your own chart. Um, but when I say fired in trading, that means you're gonna blow your account, because in trading you don't necessarily have a boss, but your mistakes will quite literally cost you. And we're gonna go over some examples, so we're gonna definitely see exactly what I'm talking about here in a second. But I just want to kind of give that perspective, and with that being said, I just really, if you guys are going to follow like my process, my strategy, I need you to like follow it to a T. Don't go adding in other things, because that's what's, like I said, gonna get you fired. That's gonna cost you money. You're gonna lose your job. And if you want this to be like something you do and make like livable income off of, you don't want to, lose that job. So that being said, let's go ahead and try to get into this. So my approach, right? When I come in for the day, I want to make sure, one, I'm up to it. I feel good. If I don't feel good, if I don't feel like already I'm having a good day in general, if I feel like I got other things that's preoccupying me, we're not trading. If this chart, if just looking at it feels like it's gonna add a little stress to me, or like, I'm just uncertain about it for any reason, I'll just be like, no. I may give it time. I may just because I typically wake up pretty early, 7:30. Market doesn't open till like 8:30, my time, Central Standard Time. So yeah, sometimes I will go ahead and just get up and do my morning routine, take my child to school, come home, and you know just kind of chill out until the market opens. On days like that, that's when I want to trade. When it's flowing, it feels routine. Typically, like day, if I just took a win yesterday, I probably am not going to trade the next day. Just you want to limit your amount of time in the market. It's a risk to be in the market. So the less you're in the markets, the better. You don't want to get caught up over trading. Yes, it's called day trading. That does not mean you need to trade every day. Um, you can trade every day. Some people can do that. When you have the money to lose and you can afford it, definitely it's lighter on you just stress wise. But if you already got a lot going on, you want to slowly incorporate trading. Like trading does not, you don't want to look at trading as like, F everything I got going on right now because this is all I need to do right now. Like, because when you have bad days or just a bad trade, it could spiral into something worse if you're not uh, able to just control yourself and just minimize your exposure. Like I said, like the less you're in the market, the less exposure, the less risk. It just makes sense. I feel like to just it's no need to rush this. You know what I'm saying? Like it'll come. It's happened for me. It can happen for you. And even me, some days I you could literally lose it all. Like if you were not careful. So you have to be spam like weed. Sorry, but so you have to be. You just have to be careful. You have to. You don't want to rush into things. You want to know what you're doing. Like, you wouldn't go into a job not knowing what you're doing and just you want to ask questions and you want to have those questions answered before you get to a situation where you're expected to perform. Do we have no data? We're disconnected. It's okay, I guess. We'll get connected before we hit the chart. Um, but yeah, so if you're just not feeling up to it, you don't have the time or whatever in the morning, then just go about your day. You can always come tomorrow. And like I said, for me, I only want to trade 1, 2, 3 times a week. Like, you know what I'm saying? Like I don't want to trade every day. I don't want to be on the chart for more than an hour a day. Try and get this back going. But how was I sitting? Okay, I think I was like this. All right. But so yeah, what time is it? Okay, 10:30. Also, it's important to mention I trade the New York session. Um, Sometimes pre-market, like so I'll come as early as 8, 7:30. Though really, if I'm pushing it, if I just want to go ahead and see if there's something there, so I could like kind of get it over with, get it out the way, and just go enjoy my day. Um, but typically, yeah, I'm trading at like I'm hopping on the chart like 8:20, 8:25. Market open, I may take a position there. Just because typically, right at the open, you'll know right away whether you won or you lost. So, yeah, I wouldn't recommend it. I mean, I can't say I don't recommend it. If I get confirmation, especially around high volume times, like I'll go ahead and take the position. I'm not even gonna lie to you. Um, and with that, I still have managed to win a majority of my trades. I'm not going to sit here and act like I win everything, um, because even just this week, yesterday and today, in fact, I started the day with a loss, and I had to sit around and wait for another setup to make my money back. Yesterday, I was able to make my money back in profit. Today, I just broke even. Um, I literally just made my money back. And it's okay, you know. Uh, yeah, I really didn't even want to trade today. I'm not even gonna lie to you, but that's neither here nor there. The point of this video is, you know, so you guys can walk away with the blueprint and an understanding of how to go about trading for yourselves, so that you guys can do your job correctly and not get fired if you do so get hired. And by getting hired, I mean you fund yourself in an actual trading account, um, whether it be with a futures broker here in America, like where I'm at, or you know, do Forex. I still sometimes trade Forex. It's it's all really personal preference. Just know futures, there's some insurance there, there's some security, but there's not as much security in Forex. There's more security in stocks and options than Forex. So just remember that. Make sure whatever broker you're trading Forex with, they give withdrawals, you know, of the amount of capital you're trading. Like they're not. Just do your due diligence on wherever you put your money for sure. But yeah. So let's see. I'll just tell you guys who I use when it comes to futures. I've traded Top Step. I've traded Tradeovate. When it comes to Forex, I've traded KOT. I think that's what they're called. KOT. In 24 karat markets. I don't trade KOT no more. They were doing some funky stuff. I seen like I can't remember exactly what it was, but I think it has something to do with yeah, I just seen some funky stuff. But recently I've been trading 24K, haven't had any problems there. Um, but I'm also just pretty much thinking about going right back to futures with Tradeovate. You know, I'm not sure yet, but just, you know, you guys have some options there. So do your due diligence before you go and sign up and put your money anywhere, and just make sure you understand the platform, how it works, and stuff like that. This is TradingView. TradingView also has a bunch of recommended brokers, which I think typically are regulated. I think you have to have like there's a whole vetting process to even be listed on TradingView. Yeah, so you know, hopefully that gives you guys a little insight on just like how it's okay to not trade every day. It's okay to feel like, you know, I'm gonna take a break today. I'm gonna go live my life, enjoy myself, and you know, because trading isn't everything, and it could pay for everything. That's fine, but it isn't everything, right? And yeah, we can't let the two get confused. So yeah, now I want to get into, all right, we've decided we're going to trade today. What do we do next? I typically trade NAS, Dow Jones. I have some pairs that I like to look at, and when I do hop on the charts, I'm not looking at all of them at once or even like multiple ones of them at a time. Typically what I'll do is I have my like kind of favorite, and then like they trickle down. Like, so I'll hop on NAS, I'll hop on gold, I'll hop on crude oil. You know what I'm saying? I'll look at US 30, and those are typically my favorite pairs right there. And you can kind of see it right here. We got US 30. There's S&P 500 on there too. Sometimes I look at that. We got gold down there, Nifty 50. Right. So I didn't put the Nifty 50 on there, but either way, Nasdaq for me, like I said, Dow Jones, US 30. And yeah, I'm not looking at all of them at the same time. I'm skimming through them real quick to kind of see if I see any setups setting up or any like kind of clean price structure. And then whichever one I kind of like the best is the one I hone in on that, and I just stop scrolling through all the other ones, and I'm only looking at that one, and I'm focused on that one, and I'm just watching it for setups. Uh, and yeah, because you don't want to be flipping through multiple ones when you're actually trying to take a trade. Like when you're actually trying to take a position, you want to be focused and make sure, because it's kind of like a sports game. You know, price is moving, and you got to decide: am I going to take a market position, which means you just press buy or sell right when you get your confirmation, or you see it setting up. You could maybe set a pending order, which could sometimes play out in your favor. But you got to remember, like if you set that order and say price takes a little longer to do what you wanted to do, but technically the setup's still kind of valid, uh, like things could change. You may have a different take profit and slightly different stop losses right before price hits your pending level. So it really just kind of depends, um, how much time you got. If you're trading on a lower time frame, it's typically harder to do that. You're going to probably be doing a lot of market executions. If you're on a higher time frame, maybe you could get away with setting a pending order for sure, but and then coming back and checking on it before even too much is even changed. Uh, but yeah, so we just got to figure out what pair we're going to trade, right? And and so for me, I have the pairs I like. So we're just gonna go with the one I like the most, and that's NAS. So let's go here, and we'll look at the futures side of things. Let's just go ahead and, is this current? How far out can we go here? This is the 1 hour. Yep. Okay, I want to make sure. Wow, NAS has just been pumping since this morning. Wow, this looks, so yeah, so see, we kind of got a little, hold on. Okay, so either way, let me not get too distracted. Right, so now we have decided which pair we're going to trade. We like what we see on NAS, and we say, okay, we're going to look at NAS. Now for me, this chart is super naked, so I need to add a couple things because I do use a couple of moving averages. And yeah, so for me, the moving average I'm finna use, this indicator's right here. All right, boom, is the 2 EMAs, and let's edit this one. One of them is going to be the 200. Right. Yeah, 200. Let's do it. We'll make the 200 red. That's how it is on my actual chart. And then this one, we're going to do the 13. Boom. So now we have 2 EMAs. Now, here we just want to look for the trend, the direction, right? And how do we know the direction? Well, let me even simplify this even more. All you want to know is, am I buying or, excuse me, am I buying or am I selling? For me, if we're above the 200 EMA, that red line that I just made, we're looking for buy positions. That's typically how I do it. And then if we're under, vice versa, if we're under the 200 EMA, we're looking for sell positions, right? And so price is looking actually super choppy over here, but that's okay. Because I'm probably going to break down to the 5 minute just to show you all anyway. Because, right, so now that I've got a chart that I like, that I think looks clean or whatever, I immediately start marking up supply and demand, supply or demand, depending. So just like if we're above the 200 EMA, we're looking for buys. If we're below, we're looking for sells. If we're above, we're marking demand. If we're below, we're marking supply. And yeah, so basically, what is supply and demand? It's kind of another word for support and resistance. But well, it's a type of support and resistance. Let me say that. It's actually just supply or demand, or demand is basically represented by a strong or like an aggressive move in either direction, right? So like we see price right here, right? Came from down here all the way. Wait, price came, what the heck? Is it white or something? Price came from down here all the way up here, right? What the heck? Oh, I can't see the line. Of course. I apologize. I'm sitting out here in the garage and the Wi-Fi is just being super, just sad. This ain't Wi-Fi. This is sad-fi. Um, no, but the connection is just trash out here in the garage. But I'm out here because I want the fresh air. I don't want to be cooped up in the house. Okay. So, anyway, let's just try this again. Okay. All right. Finally. Okay. So boom, we see price aggressively push up right here, right? So that's gonna be supply or demand. Since we're above, so demand is when price is buying or pushing up. Supply is when, get out of here, ad. Supply is when price is selling. So this is supply, right? And this is demand. Here, let me try and add something. Okay, so like this right here, this whole push right there, that's an aggressive push right there. We could consider that, like I said, supply. And then this whole aggressive push right there, we can consider that demand. And more specifically, when price moves like this, they create supply and demand zones. So supply and demand zones are a product of this. And so now this right here, boom. When you're marking supply or demand, this is how we mark it. I don't draw circles around it like I just did. Okay. Why is it being slow? Please just draw my pictures for my video. They don't want to be sitting here watching this video longer than they have to be. Okay, sorry about that. So, yeah. This is how you would draw supply and demand. Okay, so we have this supply right here. Typically, what I would do is mark from the last candle that's a different color and just mark that like high and low. And then if you could tell right here when it's going up, that same deal. We could see that this candle right here didn't go as low as this candle. So we marked it from here to the low, the most recent higher low. And Yeah, so from here I would basically just wait for something like this. Like I would wait for, since I'm looking for buys, I would wait for price to pull back into this area so we could start looking for buys. Um, for a demand setup. Uh, Now we could also take a liquidity grab setup, which is going to be now like that's like if price is to come down. Oh crap. Say price comes down and breaks the demand, then my fault, guys. Okay, so yeah, my mom and my sister were in and out of the garage here, so just like and then my mom was trying to talk to me after I literally said I'm recording a video, mom. Anyway, uh where were we? Right. So hopefully you guys are able to just like study how I draw supply and demand right here. Boom. Um and understand how to draw that and mark it and see it and spot it whenever there's an aggressive move in any direction. That's technically supply and demand. Boom. I'll mark this one here. Remember, from the start of that last different color candle to the bottom. Boom. Is it going to show up? And then, okay, there we go. Let me try and draw that again so you guys could see it in real time. Boom, right? How did I draw that? That last different color candle before the push. Get out of here. Yo, just let me delete. Oh my gosh, this is literally driving me low-key insane. But anyway, here we have another aggressive push in the opposite direction, so we would mark it up just like that. And I just used the rectangle tool. Let's try and find more. Okay, boom, we have supply right here. So as you can see, supply and demand is kind of low-key everywhere. Oh, that was too high. That seems closer, better. All right, try and mark up one more, see if I can find another one. Oh, we have demand right here. Boom. Okay, so that's basically how I do that. Let's go back to current price action. And so I don't always really ever trade on the 1 hour, so we're gonna go ahead and move to the 5 minute. That was just to kind of show you guys what I look for on the chart. But let's go to the 5 minute and now try to kind of apply everything that we said. Boom, here we are now on the 5 minute, and as you can see, we have, you know, some price action, right? We have price kind of trending up. So what I would want to do here is mark my supply or demand. Since we're above this red line, the 200 EMA, I'm going to mark demands and be looking for buys off of demand or liquidity grabs. Now, what's a liquidity grab? Liquidity grabs are anytime. Let me get this drawing tool out. Hopefully it lets me actually draw. Okay, brush. So basically this would be a liquidity grab. In a buyer's market, when we're above the 200 EMA, a liquidity grab would be when, like, say we have a candle. Bro, that looks crazy sus. What the heck is going on? Let me just, I'm trying, guys. I really am. But my phone doesn't want to work with me. Look, okay, so like a liquidity grab is this, right? We had one right here today at the open. A liquidity grab is when we have price come and either break a high or a low. In this case, we broke the lows, and then we continue to go back up in the opposite direction. You see how it looked like price was going to start trading down, and then when it breaks these lows and for a second it was under the red line, like that's a liquidity grab. That's basically the market sweeping out like buyers that stepped in right here too early. It's taking their money and then still going in their way. Like, because people who entered here, they're putting their stop losses under here. And then boom, it takes everyone out and then it continues to go up. That's a liquidity grab. So you can do that too. And we even had a liquidity grab right before that liquidity grab. If you see this move right here, took out this low right here. So all the buyers that stepped in right here and put their stops right here, boom, got grabbed. And then look, it went up. So typically I go for 1-to-1s. So this is how I would take my trade. If I did enter on this first one, I would have put my stop loss right below the candle, and then I would have just went for a 1-to-1, which would have got hit. We could see right in that next candle, boom. So that would have been a quick trade in 2 5-minute candles. So yeah, as soon as price breaks this last candle and would have broke above it, this black candle right here, when it broke above, I would have entered, and then boom, we would have gotten taken out for profit. And then that next candle would have came back. So if you were still holding it, you would have got stopped out. But then you could have also took this liquidity grab. Once price broke the high of this candle, right, you could have stop loss below the low and then go for a 1-to-1. Boom. And that would have been opportunity, you know, to get a liquidity grab play as well at the open. And that is actually the trade that I took, because I actually took this sell. I want to say once price broke below here and my stop was up here, but on my chart, it actually, the EMA, we were below it. So things are actually, we were below it on the 1 hour this morning. So at that time, I was just thinking that the higher time frame might trump what was going on, but it didn't. The lower time frame still ended up, so like the lower time frame could still, like, even if the higher time frame is saying one thing, the lower time frame could still, like, because like, see what I'm saying? Like, we just in the last couple hours, a few hours, broke above this. So this morning we were below. So I was looking for sales on the 1 hour. And like I said, liquidity grab, right? So once I figured once price broke this candle right here, see, we had this little slight pullback and then push down, right? And then we came up, and I thought we took out this liquidity, and then we had a break of this candle. So I was looking for kind of sales, but then this 1 hour candle just came up and broke all of that. So yeah, and I had to go with the market. I had to start looking for buys, which is okay, right? We were able to make our money back. I took this loss here, but I ended up getting right back in on this position, right? So and these are actual trades I took. So I'm basically breaking you down today, guys, the trades I took, right? So what was my first trade? My first trade was a liquidity grab to the downside, just because I thought that the 1 hour would drive the 5 minute under the 200 EMA and turn it to a seller's market. And for a second, we did go under, but we just didn't quite make it to our TP, and we ended up getting stopped out. So that was my first trade, a liquidity grab to the downside, right? Then my second trade, actually, no, not a liquidity grab. I'm lying. That was actually a supply trade. Can I show you guys? And yeah, work with me for a second. I know it's probably hard to follow along, but hopefully you guys could just watch the video back and understand the parts of the strategy step by step slowly before trying to really grasp it all at once. Just know it's going to take time to understand everything, but you just want to practice on demo and try to apply the steps yourself. So boom, yeah, this was actually a supply setup. Why? Because here is supply right here. And so when we are looking to take trades off of supply or demand, see, price didn't take liquidity right here. So we can't call it a liquidity grab. We actually respect the zone and then rejected it. And then once price broke this candle that rejects the zone. So notice how we have this long wick right here in this last black candle. It rejected our supply. So whenever the origin of supply or demands followed by like a break of the candle, then you want to go ahead and enter. And like I said, I target the 1-for-1, 1-to-1, and yeah, just to be on the safe side for real. Because if you're winning more than you're losing, then nothing's wrong with taking 1-to-1s. Um, so yeah. Then but yeah, so that's another reason I got into that sell, because we were coming off of the supply zone and then we broke the candle. So I was like, okay, that's a good setup. But I should have still been cautious just because we weren't really quite under yet, right? And but like I said, the 1 hour too had me thinking like it'll drive price under. So, but it didn't happen that way. What ends up happening, or I wouldn't even call this like a liquidity grab. I just would call this like a continuation move that I got. So basically, price ends up stopping me out. We come up here, and when that happened, I marked up demand because I don't know if you guys saw it while I was explaining, but we have a demand right here. So what makes it a demand? We have this aggressive push, right? And we have this last different color candle. So we can mark that from the top of that different color candle to the low of the move, and then boom, this whole area is demand. So now if price pulls back into here and rejects it like it did down here when we were looking for sales, but to the upside, if we reject to the upside and then get a break of the candle to the upside, we can start looking for buys. But the reason I went ahead and took this buy once price broke this candle and then put my stop loss below the low of this candle and then went for a 1-to-1. The reason I took this buy was just because price will do this sometimes. And as you can see, like price pulled back. We got a break. As long as we get a pullback and then a break of the candle, then you could go ahead and look for your trade. And remember, if we're above the red 200 EMA minus red, you can make yours whatever color. If we're above the 200 EMA, you're looking for buys. If you're below it, you're looking for sales. And this is a scalping. Like I scalp. I don't like to be in trades long. As you can see, these positions would have been done in like 15 minutes maybe. I got stopped out in 5. Yeah, let's see. We could even see right here. I don't like this one. I can't tell if price broke the low first or the high. Because if it broke the high and then you put your stop loss down here, you got stopped out on this one. So you could have got stopped out up there trying to do the same thing. I could have got stopped out myself. So yeah, like if you'd have put your stop loss right here, you got stopped out. But if this happened first and then it went up, then you would have put your stop loss below here and you still wouldn't be stopped out. You would actually still be holding this trade because as you can see, it hasn't hit 1-to-1 yet, but it also hasn't hit stop loss. So basically that's what I look for. Let's kind of go back and see other times where this has played out. So okay, yesterday, right? So this one is a really big one, but you were able to technically take this trade. And I did take this trade, and let me tell you, like, it almost didn't, it almost went against me. So, but I'm gonna go ahead and show you guys at the start of the day yesterday, we had supply right here, right? We had this 1, 2, 3 candles push aggressively down. And then now this one, it was kind of a big zone. As you can see, we had this last different color candle. We marked it from the high and the low. And yeah, we waited for price to pull back into it. As you can see, boom. Then once we got a break of that first candle that touched into the zone, once we got a break right here, we entered our sell. So once we broke this candle, and then we put our stop loss right there. I'm trying to get it exact. Right, boom. So we put our stop loss at the high of that candle, and we just went for a 1-to-1. Now, I want to say on my broker, I actually got filled. Like, it filled my order and it took me out. It hit my TP. Or I think it was just so close, and this was a whole 5 minutes that it just got so close and didn't go through. I think I just closed it. And then as you can see, the next 5 minutes, price just went soaring. Like, basically just completely changed directions and turned it to a buyer's market. Now, there were opportunities here. See, okay, we have now we're above the 200 EMA, and we get our first black candle where there was basically a little pullback. Now, your candles are probably going to be green and red if you're just getting into this. That's like the default colors. So this would be a red. My reds are blacks. My green is blue. So this black candle would be like a red pullback. And then once you get a break of that high, you could enter a buy right here as a continuation move. Stop loss right here. Yep. No. Why is it going somewhere randomly? Boom. Okay. And then you just target a 1-to-1. And this one was a really long trade, but it eventually did hit profit before hitting stop loss. It might have even hit, I mean, like, I'm trying to mark it, but hold on, let me do this. I know what I could do. Stop is 289. Let's make this 289. Boom. So this might have actually got filled right here, right? It's so close to it's so close. It didn't quite really hit it, but depending on your broker, you might have got filled. If you're sitting there watching the trade, I say if it gets close to TP, if you're at your goal. So see, for me with this account I've been trading recently, TP usually is well above my dollar amount that I'm wanting to make a day in my head. So like with a trade like this at the size that I've been trading, it could make me my goal really fast. And I could make more than that, but you know, sometimes I will just close the trade early if I'm either close to TP or I've already met my goal, right? And that's just so personal preference. Let's try and find another example. Here goes a liquidity grab where price took out these lows right here. So this was like a trade within the trade, because this was, I mean, like I said, after the fact maybe, but we have price sweeping these lows right here. And then right after we break the high. So you could have took a 1-to-1 position here. Stop loss below that lowest point. 1-to-1. Let's see if we would have got stopped out or hit TP first. As you can see, boom, we'd have hit TP first, and only in like within 10 minutes, because 2 5-minute candles, that's only going to be 10 minutes, guys. We kind of had demand right here. Now here's an example of a liquidity grab play. So see, this is when demand fails. So here you would have got in, boom, price finally touches in right here. And then right here, we get a break of this candle. So if you would have entered off of this first break of the candle, then you would have got stopped out. And that it happens, guys. Sometimes, like I said, I don't win all the time. I win sometimes. And so if we would have set that 1-to-1 for this one, price would have stopped us out, and then it would have came and broke this zone and invalidated it. And when price breaks the zone, I just delete it. It's invalid. But since it did break the zone, it could be a good potential liquidity grab play. So what do we wait for? We wait for a break of the candle. So we wait for this break of the candle. Finally, another one. After we've invalidated and swept liquidity, we could wait, right? So boom, and then we could set that 1-to-1, and it would have got hit right away. Now, as you can see, you can get better R to R some days, but all I'm gonna say is if you have a goal and you've already met your goal, you don't need to be holding trades. If you want to hold a trade, I say let it be a trade that you have like set your risk to break even, or you have the money to lose, and you know what I'm saying, like don't just like try to hold out everyone for a home run, because I'm not gonna say it won't go, but I'm just not gonna also put I'm not doing that. I'm just showing you guys what I'm doing. I'm taking the 1-to-1s. Sometimes I'll leave it running. Sometimes I'll take off part of my position and leave some of it running. That's something that you guys could do. But you want to try, I say, get you into the habit of taking profit. Take your money, go home, live your life. This video is already pretty long. I think I've gone over so much. And yeah, if you follow those steps, if you try to your best to just kind of do like how I showed you in practice and get used to seeing that those setups, then and I did a sell setup, I did some buy setups, and it's literally the same thing either way. Here, I'll do one more sell setup actually. So we could see here we have price breaking this high, taking liquidity. These were sellers, market was coming down, and then boom, price comes up here and takes all the sellers' money because they had their stop losses above there. And then we're pushing, and then boom, we get a break of the candle, and this rejected the 200 EMA. We're still under, so we could take a sell. Stop loss right there. And we could just target a 1-to-1. Now, because your stop loss is so small on here, this one is one I would recommend just kind of trading, say, to the next demand zone or next level of supplier demand. And we kind of had a little resistance right here in this demand. So you could have traded to the demand zone, and then boom, that would have been a good trade too. When things line up like that, sometimes you could leave those runners because they're lining up like that. And as you can see, price actually went even like twice as far, if not 3 times as far. And then there are times too where even though you're under the EMA, price will be pulling back and be buying up, right? In those cases, I mean, like, let's look at the time. This was overnight. So I don't even trade this time. Like I said, I trade the New York session. So I wouldn't have even seen that. That does tend to happen sometimes out of session. I guess it's just other countries trade the correction. We trade the main trend. I'm not sure. Whoever's trading at that time, maybe if you're watching this video, you have any insight on why the market kind of moves counter trend, or maybe it's just because like there's no body, like the bulk of the orders aren't getting placed, so the market can correct itself. It's not that much volume or something like that. I don't know. I just typically wouldn't trade in this environment if price is just steady pulling back and doing this. I mean, yeah, once price started doing this, you could Maybe if I had looked at the higher time frame, there was something lining up back then. Yeah, no, not even. Even on the higher time frame, this looks really bad. But we eventually did tap into. So see, we have supply right here. So I might have just set this out until price finally came up. And I mean, you could have got stopped out here if you entered early. Could have got stopped out here. Eventually, if you'd have entered sales right around here, you'd have been good. But and then and then this is around the open. So yeah, see, look how clean that price action is. Actually, let's delete this. At the open, you would have had an even better move because you had supply right here. And so yeah, see, and this is like 7, 8. The time I trade, we had a pull back into supply. We get a break of the candle low, and then looks what happens. Price just melts away. Boom, and then so the trade would look something like this, guys. Stop loss just above there. Target your 1-to-1. And that's it. Just call it a day, guys. Simple as that, right? So that's on the 1 hour even. Yeah, sometimes when things aren't looking clear on the lower time frames, that's when I kind of do like to zoom out and just see if there's any setups on higher time frames. I'll look at the 5, I'll look at the 15, I'll look at the 1 hour. You know what I'm saying? This video has been super long. I know like there's been points where I had to kind of stop. It might have been choppy. I might have gotten super, seems like just a lot of information. And that's what I wanted this video to be. Life is short, you know, guys. And I want to be able to get the information out there and share it with you all before I'm not, right? That being said, hopefully you guys are able to get value and just find what you're looking for in this video as it pertains to learning how to trade and more specifically learning how to trade like how I do and stuff like that. Hopefully this is a resource for you. Hopefully, some things. I want to give you guys some vocab words too at the end of this just to like maybe help you process everything. Market structure, let's see, momentum, and do I have a third one? I don't. I think I'm just no, I don't have anything. So let's kind of, the way I want to wrap this up, because like I said, this is a step-by-step thing. So now we're done with the day, right? We're done trading, guys. We took our position. We woke up, we decided we wanted to trade, right? We figured out which pair we wanted to trade. We waited for our setup. We marked up our moving averages, and we understood whether we were taking buys or sells. We learned how to draw supply and demand. So we marked our supply and demands, and we kind of seen some liquidity grab plays. We seen some just pullback and continuation plays, and we seen supply and demand plays, which is just a different form of pullback / continuation play, right? It's just one with extra confirmation because it's coming off of a supply or demand zone. I think I just explained it better now than I did when I was actually on the chart explaining it. So if something just clicked for you and you want to go look back, I don't even blame you. I blame you. I can't talk. I've been talking for a really long time, huh? But yeah, so now at this point, we've taken our trade. We either won or we lost, right? And like you guys seen, sometimes you'll lose. They don't always all win. They typically, like, I'm just was marking things up and showing you guys, so I wasn't looking at the time. So definitely outside of session, I've noticed I take more losses, which is why when it comes to my actual count, my live capital, I don't trade out of session. I trade the time that I told you I trade, and I don't trade outside of that. And if you go trading outside of that, you will experience the same losses that I did. I'm just telling you now. Like, don't even dare trade a different time. If you can't, like I said, make the time that day, you don't have to trade that day, right? That's the first thing you need to decide. Am I going to trade today? And if you are too busy, if you got other things going on, go do your other things, because you don't want to get fired from this, right? That's not why you're here. You're not here to get fired. So after all of that, after I've taken my trade, hopefully I've made some money today. If I didn't, hopefully I set a stop loss and manage my risk accordingly. I think I could have went over that better, but it's only so much I could give you all in a video, and that's why I tried to do multiple examples of trades. That's why I marked up where my stop losses would go, so you could kind of try to study where I'm getting in and out of the market. But that being said, the best way is to just hop in my Discord, hop on my Instagram, and stay in tune to the lives, because when I do go live, you'll be able to see me real time, ask questions with me real time, and I think that's the best resource I got. And again, it's going to be free all 2025, but this is also going to be here for you too as a resource if you just want to watch it back and try to understand it, because I understand that too. The more the merrier. Just don't give yourself information overload. If you do, I mean, that's cool too. I've been there. Just also go get some fresh air, go live, go eat, go breathe, go have fun, hang out with friends, love your family, love yourself. Love, peace.